So, you're interested in learning about Bitcoin ETFs, right? Let's break it down into simpler terms. Imagine Bitcoin as a digital form of money, and an ETF, exchange-traded fund, is like a basket of investments that you can buy and sell on the stock market. A Bitcoin ETF combines these two concepts. It's a way for people to invest in Bitcoin without actually buying the digital currency directly. Spot Bitcoin ETF is a special type of investment fund that buys real Bitcoins. So, when you buy shares in a spot Bitcoin ETF, you're indirectly owning a piece of actual Bitcoin, even though you don't see it or hold it in a digital wallet. Before January 10, 2024, Bitcoin ETFs couldn't hold actual Bitcoin. They could only invest in companies related to Bitcoin or in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a future date at a set price. Then how spot Bitcoin ETFs work? Spot Bitcoin ETFs keep the Bitcoins they own very secure, often in what's called cold storage, which means they're not connected to the internet and are less likely to be hacked. When you buy shares of a spot Bitcoin ETF, the price of your shares goes up and down with the price of Bitcoin. Here are the pros and cons. Pros. Easy to use. You can buy a spot Bitcoin ETF just like any other stock. Safe and regulated. It's overseen by financial authorities, so there are rules to protect investors. No need to deal with the technical side of owning Bitcoin directly. Cons. Bitcoin's price can be really unpredictable, which means it's risky. There's still a chance of cyber theft, even with all the security measures. You have to pay fees to the people managing the ETF, which can eat into your investment returns. The future of spot Bitcoin ETFs. In January 2024, the U.S. government started allowing spot Bitcoin ETFs. This was a big deal because it meant that the government was starting to accept Bitcoin as a more mainstream investment. Why choose a Bitcoin ETF over actual Bitcoin? Some people prefer Bitcoin ETFs because they're easier and feel safer than buying Bitcoin directly. You don't have to worry about losing your password to a digital wallet or getting hacked. Plus, you can buy them in regular investment accounts, like for retirement.